Every day we spend $5 without a second thought, a coffee, a quick snack, or something equally forgettable. But what if I told you that small overlooked expense could be the key to building life-changing wealth? Starting with an initial $10,000 investment and adding just $5 a day, you could grow a portfolio worth hundreds of thousands over time. In this video, I'll show you and Josh the top 5 best Fidelity index funds. I'll also show you how just $5 a day can grow to hundreds of thousands over 10, 20, and 30 years. In the end, I will show you my top index fund with the potential to turn your initial investment and $5 daily contribution into a portfolio worth over $500,000. But first, why choose index funds? Index funds pool money into a range of stocks, providing exposure to the broader market rather than betting on a single company. This helps reduce risk and increases your chances of steady growth without the need for constant monitoring. They spread risk across many companies, giving you a low-stress, long-term investment strategy. It lets you ride the overall market's growth with minimal effort, like sitting on a bus instead of walking through the stock market maze. And Fidelity offers low-fee, reliable index funds, perfect for building wealth with ease. It acts as a stage. Index funds build the base, and compound growth steals the show. Compound growth lets your returns grow on both your initial investment and previous returns. For example, invest $10,000 at a 7% annual return. In year 1, it grows to $10,700. By year 2, you earn returns on $10,700, reaching $11,449. This snowball effect accelerates over time. Fidelity index funds are ideal for compounding, offering consistent returns, growth, and reinvestment potential. With patience and regular contributions, they're a powerful tool for long-term wealth building. Coming next are the top 5 Fidelity index funds ranked from good to the best based on the value they deliver to your portfolio. Number 5 on my list is Fidelity Small Cap Index Fund with a ticker symbol FSSNX, a fund that's perfect for those who love the idea of discovering hidden gems, or as I like to call it, the next big thing. This fund focuses on small cap stocks, companies that are just starting to make their mark but have significant growth potential. While small caps can be a little riskier, they also offer the chance to supercharge your returns if you're willing to play the long game. Small cap stocks are known for their volatility, but that's also what makes them exciting. When the market is favorable, these companies can deliver returns that outpace larger, more established firms. FSSNX gives you a way to benefit from this growth without having to pick individual winners. FSSNX is ideal for investors who are comfortable with a bit of risk and are looking to tap into the dynamism of emerging companies. By staying invested and letting compounding do its work, you're setting yourself up to reap the rewards of this high-growth sector. Here's how your index fund would grow with FSSNX. It has a dividend yield of 0.23%, a dividend growth rate of 4.94%, and an average share price appreciation of 5.89%, which is expected, and the small cap would reinvest most of its profits. For instance, if you start with $10,000 and contribute like $5 a day, by year 1, your portfolio grows to $13,000. 10 years in, it would be valued at $51,000. At year 20, it is projected to reach a valuation of $149,000. And after 30 years, a solid $380,000. FSSNX's dividend payouts are smaller compared to coming funds, with annual dividends of $247 by year 30, which is expected from a sector that reinvests almost all of its profit for growth. However, the strength of this fund lies in its ability to capitalize on the explosive growth of small companies. Next, number 4 on my list is Fidelity 500 Index Fund with a ticker symbol FXAIX. If the stock market had a greatest hits album, this fund would be it. Tracking the S&P 500, it gives you access to 500 of the largest and most influential companies in the US. It is a one-stop shop for blue-chip stocks, offering the stability and growth potential that investors crave. What makes FXAIX a must-have is its balance of stability and performance. Blue-chip stocks are known for their stability, and this fund ensures you're investing in companies that lead the market through innovation and strong fundamentals. Whether the market is up or down, the S&P 500 remains a benchmark for long-term growth. This index fund isn't about flashy returns or high risk. It's about consistency and trust. Over time, it delivers the kind of results that build wealth steadily and securely. For anyone looking to build a solid foundation for their portfolio, FXAIX is the ultimate tool. It's ideal for investors who want exposure to the US market's best performers without having to pick individual stocks. Here's the breakdown of your investment in FXAIX. It has a dividend yield of 1.19%, a dividend growth rate of 5.39%, and an average share price appreciation of 11.20%. All work together to deliver impressive returns over time. Starting with $10,000 and contributing $5 daily, your investment grows to $13,000 after just 1 year. By year 10, it will be valued around $54,000. At year 20, it has the potential to reach a valuation of $164,000. And after 30 years, a solid $430,000. By the 30th year, the annual dividend payout from FXAIX will reach $1,700. While it may not deliver the same level of income as better funds on the list, its strength lies in its capital appreciation. Companies like Apple, Microsoft, and Amazon dominate this fund's portfolio, making it a growth engine fueled by some of the most successful businesses on the planet. These are good returns, but after this, all the index funds will have the potential to cross a $500,000 portfolio valuation. In the end, I will show you my top index funds with the potential to turn your investment into over $600,000 and pay over $22,000 in annual dividends. Next up, at number 3, I have the Fidelity MSCI Consumer Staples Index Fund ETF with a ticker symbol FSTA. If you're looking for stability and steady returns, this fund is like the reliable cornerstone of a portfolio. It focuses on consumer staples, the everyday essentials we can't live without, like food, beverages, and household goods. Even during uncertain economic times, this sector's demand stays, making FSTA a dependable choice for long-term investors. The key to this fund's appeal lies in its stability. While it may not have the high-octane growth of emerging markets or small-cap stocks, it provides a sense of security. Think of it as the financial equivalent of a safety net. When markets are turbulent, consumer staples remain steady, ensuring your portfolio weathers the storm. But don't mistake stability for mediocrity. With its combination of dividend income and capital appreciation, FSTA delivers substantial long-term returns. In essence, FSTA is for investors who value reliability and consistent growth. It's the fund you can count on to keep your portfolio grounded while still delivering impressive results over time. To understand its potential, let's look into the future projections. FSTA has a dividend yield of 2.33%, a dividend growth rate of 7.35%, and a share price appreciation of 5.84%. If you start with a $10,000 investment and contribute $5 a day, by the end of year 1, your portfolio will be valued at $12,923. Fast forward to year 10, and it will reach a valuation of $58,712. After 20 years, it will climb to $192,819, and by year 30, your investment has the potential to reach a solid $552,199. By year 30, your portfolio will pay around $7,386 in annual dividends. These consistent payouts can be reinvested to accelerate growth or used as a reliable income stream. Consumer staples are known for their predictable cash flows, and this fund taps into the strength of industry giants like Procter & Gamble, Coca-Cola, and Walmart. Taking the second spot is Fidelity Advisor Emerging Markets Discovery Fund with a ticker symbol FEDIX. This fund opens up the world of high-growth opportunities by investing in emerging markets, economies that are rapidly developing and poised to become tomorrow's global powerhouses. What sets FEDIX apart is its focus on economies like China, India, Brazil, and others that are on the cusp of significant industrial and technological revolutions. These markets often experience higher volatility than developed ones, but they also provide unmatched opportunities for returns. With FEDIX, you're investing in sectors like technology, infrastructure, and consumer goods that are driving the growth of these regions. The key to success with FEDIX lies in patience. Emerging markets can be unpredictable in the short term, but over the long run, they tend to deliver massive rewards. It combines a competitive dividend yield, strong growth potential, and global diversification into one compelling package. If you're ready to take your portfolio international, FEDIX is the way to go. Now, let's break down the numbers to see why FEDIX is such a valuable addition. This long-term growth is fueled by a strong dividend yield of 2.12%, a dividend growth rate of 9.74%, and a share price appreciation of 3.37%. Starting with an initial investment of $10,000 and a daily $5 contribution, your portfolio grows to $13,000 after just 1 year. By year 10, it climbs to $59,000, and after 20 years, you're looking at $202,000. That's when the compounding snowball effect kicks in, and by year 30, your investment has the potential to reach an impressive $632,000. By year 30, your portfolio will pay around $15,000 in annual dividends, which translates to about $1,300 per month. This fund offers the perfect balance of growth and income, making it a reliable way to capture the potential of emerging markets while benefiting from compounding dividends. And finally, at number 1, and topping my list, is the Fidelity MSCI Healthcare Index ETF, with a ticker symbol FHLC, a heavyweight in the world of smart investing. This fund is the backbone of most portfolios, combining stability with growth potential in an industry that's always in demand. No matter what's happening in the economy, people will always need healthcare. That's what makes this fund so compelling. It thrives on essentials and innovation. What makes FHLC stand out is its resilience. The healthcare sector isn't just about treating illnesses, it's driven by innovation, from groundbreaking medical devices to life-saving drugs. This focus on essentials and progress means that even when the economy struggles, FHLC tends to grow steadily, making it a reliable choice for long-term investments. In short, FHLC combines a strong dividend yield, exceptional dividend growth, and reliable share price appreciation to deliver a powerhouse performance. Now, let's talk numbers because FHLC has some serious credentials. Its current dividend yield stands at 1.39%, backed by a strong dividend growth rate of 12.42%. This means that over time, the dividends you earn don't just stay the same, they grow and they grow fast. Pair that with the fund's 7.37% annual share price appreciation, and you have a recipe for both consistent income and long-term wealth creation. For instance, if you start with $10,000 and contribute $5 a day, by year 1, your portfolio grows to $13,000. 10 years in, it will be valued at $57,000. At year 20, it is projected to reach a valuation of $195,000. And after 30 years, a solid $646,000. Also, by the 30th year, your portfolio generates $22,000 in annual dividends, or about $1,800 every single month. Want to know the fastest way you can live off dividends and earn $2,800 in dividend income every month? Click the video on screen to find out.